Hello, this is Rochelle Agatha, and this is an additional lecture on the accounting equation, and I'm using exercise 1-20 as my example. Now, if you're doing this in Applia, the numbers do change, so what you see in Applia won't look exactly like this. The numbers will be different. But it's a good example to go over some of the different things you need to remember that carry all the way through the class. So first of all, I used a lot of colors, so if you can print this out, that would be fine. Hopefully it'll help you out. Please remember that the accounting equation is assets equal liabilities plus owner's equity. That is always the accounting equation. The other thing you learned in chapter 1 is that the change in owner's equity is net income plus additional investment less withdrawal. Now remember, net income is revenue less expense. So if your revenue is smaller than your expenses, you will have a net loss. But this is how you calculate the change in owner's equity. So there were 4 different scenarios here. I went ahead and set them all up side by side so that you could see my thought process. At the beginning of the year, you had assets, liabilities, and owner's equity, and they gave you all the pieces for Earth. So you know that your assets equals your liabilities plus your owner's equity. So the math there is the 216 is the same as the 129,600 plus the 86,400. Then at the end of the year, they said they gave you the assets, the liabilities, and you had to figure out some of the stuff down below. So you knew that your owner's equity was once again the math between the two. Now you got down to the bottom and you had these missing pieces. So the key to what happened during the year is this change in owner's equity. Net income plus investment less withdrawal. So in this situation, I went ahead and put net income where I knew it. So net income for Earth was the 71,190 less the expense is the 67,310. You know your change in owner's equity is the difference between the beginning owner's equity and the ending owner's equity. So that the difference between the 86.4 and the 151.2 is 64.8. So owner's equity grew by 64.8. So your missing item is the math between the pieces up above. So if your change in owner's equity is 64.8 and you have all of the pieces identified, you can calculate what your missing item is. So this math here is plus revenue, less expense, less withdraw is the additional investment. Carrying it along, I checked myself to be sure that I got my change in owner's equity. So the math here is the difference between the revenue less the expense less the withdrawals plus the additional investment. And you can see up here my formula up at the top is actually doing that. So if I hit my F2 key just so you can see the math with the color, you can tell that I took revenue less expense less withdrawal plus investments. That number is the same as this change in owner's equity, which is the difference between these two. Okay? Net income is the difference between revenue and expense. Okay, so let's do the next one over and see if it becomes more clear to you. So up here they gave you all of this information. And you have your pieces here for your change in owner's equity. So once again, your change in owner's equity is the difference between the two beginning and ending owner's equity. Okay, so there's the math there. Now your net income you don't know. I put a formula there because you're missing these pieces right here. So I'm going to come back to that in a minute. Your missing item is going to be the difference between your change in owner's equity and the pieces that you know. So what I did was I took my change in owner's equity plus my expense plus my withdrawals less my additional investment. That's why I had math is so important in accounting, because if you struggle a little bit with natural sign and how to do math equations, this might be a little difficult for you. So I want you to go back through this. If you have to watch this lecture a couple of times, go ahead. But you back into the numbers. Coming down below to prove myself out, here is my revenue less my expenses, my net income, less my withdrawals, plus my additional investment. So these numbers are the same. My change in equity is the same. Now I can back into my net income. Once I know my revenue, my net income is revenue less expense. Okay, let's go back up and do Neptune. Same thing, they gave you all the important pieces here. So I came down and I found my change in owner's equity. I could do my net income. And then my missing piece is, once again, my change in owner's equity, less my revenue, plus my expense, less my investment. And I put the brackets so that I could get my change in owner's equity to show my missing items show up with a positive sign so that it wouldn't look different amongst the top. See how they show withdrawals as positive? So I put the parentheses there on purpose so it would look the same. Then I came down here and proved myself out. I have plus revenue, less expense, less withdrawals, plus investment. That's my change in owner's equity. Okay, the last one, had a couple emails on this one. The hard part for most people here was that you were missing the top part, which had people confused. So let's start it from the bottom. You knew what your change in owner's equity was because you have your pieces here. Okay, so your net income is revenue less expense, and then your change in owner's equity is the difference between the same formula here. Let me click on it again. Oops, sorry about that. Let me go back up here. Okay, it's the difference between your changes of all your pieces. So we can come down here and actually calculate it. My change in owner's equity is revenue less expense, less withdrawals, plus additional investment. So there's my minus $36,000. So I just put that right there so I could back in to my pieces. So I have all the pieces. I just need to back into my assets. So I came over here and I did it off to the side for you. You know, this is just a formula that's going to go away when I change it. You know that the beginning owner's equity is the ending owner's equity less the change. So your change was a negative, so you actually went down. So the 148 is the addition of the ending owner's equity and the change. So you shrunk an owner's equity. Once you had that, you could back into what your assets are by taking owner's equity plus liabilities. So now, just to prove that it all works out, if I take that number, then all my numbers map out. So let me just review for you, because this is truly in accounting. The first two chapters, chapters 1 through 4 are the crux of everything, and then from there on it is pretty much smooth sailing. Get that accounting equation down. Understand that owner's equity is made up of these pieces: revenue, expense, withdraw, and additional investment. Know that beginning and ending owner's equity will change by the net of these. And think of it as a math equation. I would make flashcards of this. I would make a flashcard for the accounting equation for what makes up the change in owner's equity, and do this problem. Just redo it a couple of times. The other thing I wanted to say is any of the problems in your book that have green X's by them, this exercise 1-21 has a green X, and 19, those all have templates that are linked on Blackboard and on my website, and if you open those problems and attempt them, it'll tell you if they're wrong. So if you need more homework to do, I mentioned this briefly in an earlier email, go ahead and try those, because then it'll tell you if you're wrong, and it's a practice by doing, especially in an online class. So send me an email if you have any questions. I hope this was helpful. Thanks.